investors have their attention fixed on Nigeria's $670 billion Naira T-bills auction. Meanwhile, sustained cherry-picking is seen across the belly of the bond curve, especially on the 2031 and 2035 securities. Kinskin Ukeje, the Treasury Team Member at Access Bank, joins me now for more market movements today. Thank you so much for your time, Kinskin. And I'd like to start with your expectations for the T-bills auction today.
Thank you, Ken, for having me. My expectation for the T-bills auction is a slight decline, given that the DMO is offering 670 billion, which is 70% of the expected maturity, which is 955 billion, hitting that 955 billion hitting the system. So it's just we have more maturities chasing fewer rollovers. So that's what will cause a marginal decline on the T-bills NTB closing.
Yeah, but what has shaped the sentiments in the market this week so far then?
Okay, for the FX market, we've seen it drive on a bullish note, and we've seen more demand drive. However, we've seen the Apex Bank, that's the CBN, and some international counterparties, the FPIs, try to provide supply to the market and just to manage the demand pressures in that market. However, we've seen day on day the Nigerian foreign exchange market closing rate trade flat at 1,499 naira to the dollar.
All right, now looking back at the bonds space, then what can we expect? And also, in terms of secondary market activity, what's shaping sentiments there?
So at the bonds market, this week we've seen a bullish trend, which is featured cherry picking on the 31s and the 35s. This is because sentiments in the market says that the T-bills space is going down in rates and people are moving to the short end of the bond curve. That's the belly of the curve on that end. However, given the communication by FEC yesterday that they've approved over 700 billion bond issuance to clear the outstanding pension debts, we might see a kind of repositioning of sentiments in the market.
Interesting times, you would say, but let's look at the Naira and then going forward then. I'd like to get your medium-term expectations. We've seen quite some interventions come from the central bank here. We've seen the FX code being launched. I'd like you to speak about the likely impact of these initiatives in the medium term.
Okay, for the Naira liquidity end, what we will see is we're expecting more liquidity in the medium term, given that the DMO is not rolling over the full maturities as stated in their calendar. They are rolling over just about 70% of what will be maturing this time, and we expect that there should be more liquidity in that market. However, for the FX side, with the implementation of the FX code, what we will say is that it's just trying, the CBN is trying to bring more transparency and fairness and justice even for all counterparties in the market. Given with the earlier implementation of the BMAX system, we've seen how transparent the market and the effect in the market has done to the USD engineering rate. So we just expect that market counterparties will abide by the FX code, and we should see more transparency in that market.
All right, could you mention the liquidity, because I'm trying to imagine system liquidity, the state of play for liquidity. We saw that improvement yesterday. Is it more the same for today?
Yeah, for today we've not gotten the figures for the opening at this time. However, for yesterday we saw that growth due to some transactional credits by the CBN to some interbank counterparties. The reason for such credits are not really market info at this time.
All right, now quite a lot playing out there when you look at what we can expect for inflation for the month of January. But I'd like to get your take in terms of inflation expectation, and as well what we can expect from the MPC in their coming meeting. We've seen that the high interest environment is here to stay, more or less.
Okay, for the inflation, given the rebasing of the inflation year to 2019 and the changing of the weightings for the contributors of the CPI, we should start seeing the inflation rate start to taper down going on from this month. And also for the MPC, as they've always shown, we would always see their decisions be based off of the inflation rates that we published.
All right, thank you so much for your time. Definitely quite a lot to look forward to in the market. Kinskin Ukeje, the Treasury Team Member at Access Bank.